Yo, morning. 10 o'clock here on the East Coast. What is happening? Uh, Today, I'm going to be finishing up the ATM business, financial model integration with the three statement model edition, cap table. So I'm streaming till it's done, and it might be a bit, but we'll see. And then, yeah, like I was talking about, I tweeted out, I'll probably do a seller financing model here at the end of the week. Let's get our link out to old Twitter. Out to old Twitter. Sound check. Yep, sounds good. Live module modeling. Here we go. Don't forget, check out more financial models here at smarthelping.com. I've got over 100. This is what I do for a living. I build these things to perfection as I see it, and perfection often means usable. So the one we're doing now is part of the industry specific category, and it is, where is it? ATM machine, right there. So the template I'm working on now you can get for only 45 bucks. Uh, or you can buy the whole bundle of all of these things for 4.99. There's every single industry specific model is unique and valuable depending on what you're looking for. And remember, you could just buy everything on the whole site for $9.99 if you would like. It's at the Financial Models tab at the top, and then right at the top here. Okay, so let me get this going. Hope everyone's having a great Tuesday. Um, so where did we leave off yesterday is the question. I believe I got the Capex linked up to the purchase schedule. And that looks pretty good. Um, so we can probably go into, let's format this. Sorry, I'm just tired today. Had a rough basketball game last night in a rec league and pretty sore. Had to drive for 3 hours before that to do something else. So I'm groggy here, but we'll get through it. All right, income statement. So we can hide. We don't need these. These are just extra uh, capex items that we're not going to use. Let's look here. Okay, this looks like it's all working. That's good. For the depreciation expense. And then, okay, so let's go to revenue. So there's only going to be one revenue stream, which is ATM fee. We have that here, total ATM revenue. Then you've got some other variable costs, merchant fees, processor fees. I'm going to call these not cost of goods sold. This is just a standard thing, but I want to call this variable costs. And this is more of a contribution margin. Okay. We'll update that here as well. So that's kind of what the business itself can do outside of admin and other fixed operating expenses. So that's our revenue piece right there, right here. No, sorry, right here. So row 37, let's link that in. This is going to be ATM fee right here. So this includes all of the ATM machines that are deployed over time, and it's got most of the logic here is in this fee matrix tab to try to calculate, the value of each tranche, the increase in any increase in fees over time, uh, which is right here, and then average active days per month. And then this populates. Now this depreciation we don't need anymore. We can remove this, I believe. Yeah. We've got our own depreciation schedule logic, so this is no longer required. So let's look at this. It's checking if it's an active month. And so if it is active month, it's doing revenue. So G times E times P. So count G transactions per day. And then P, global control P10, which is, so transactions per, what did I say? Transactions per day, count of ATM machines in each tranche, and then active days in the month. And then it's multiplying times this, and then this is looking at P9 on global control, which is a monthly increase in the transaction fee if applicable. So this shows how that grows over time as soon as it starts. So that's the main unique logic here for forecasting revenue dynamically based on, deploying these things over time. All right. So okay, so those are ATM fees, revenue, depreciation. This is what, we're changing this to variable costs. Okay. And oh man, did we pull from the manufacturing model? I must have, because all this has nothing to do. We don't need any of this stuff. So really, we're just going to have merchant fees, and then these three variable costs. And variable costs are basically just saying these are the costs that directly change with the volume of revenue. All right, now we just got to reference those. So merchant fee, this is if you have to pay the merchant that's, basically you're paying rent or whatever to the vendors that you're putting the ATM machines at. And then these three. This actually did work out nice because the manufacturing model had a lot of variable costs, and so does this, so that kind of fits nicely. Okay, so now we have operating costs. I believe I just had, yeah, one set of, basically these are G&A, all G&A, so we don't have any of this. Although we will have startup costs here. And there's different rules in accounting for tax purposes for what startup costs are tax deductible. We're just putting them all in here, but that's just something that you'd have to figure out with your accountant. But for the purpose of the model and the getting everything in the balance, we're including that in the operating costs. There's that. And the key is we're going to have to make sure we balance at the end after we do all these references to the monthly and annual detail and get the cash flow statement, balance sheet should match the cash balance on the monthly detail because that's what's coming from. The nice thing about the three statement model is it's really a giant sanity check. It's something that's universally understood among finance professionals, so that's why that's the purpose of integrating all these into these models to make them more professional, um, able to be used to communicate to investors or whoever has an interest in the business. All right, let's see if this matches. EBITDA is 5727. It should be off by just the startup cost amount. What do we have here? 3,013,000. Let's zero these out for now just to see. Okay, it's quite a bit off by 3 million. Let's look here. So monthly detail. We have negative 19,000 in month 2. Here we have negative 15, so clearly something's wrong. Let's see. Let's start with revenues. So Feb is 13,686, 688. So we got that. Then we have merchant fees plus variable costs adds up to about 7.5K. Contribution margin at 9.1. Yep. So this is off. This is off. This is off. These are referencing the same thing. Total merchant fees. Merchant fees. So what I did there, I see what happened. Now it should match. I went in, so these total merchant fees I actually brought down into here. And then I referenced those total, and then I'm assuming I didn't count. Yeah, okay. So this merchant fee section is just if you want to see the costs for each tranche. But the total per month is here, and that's what's actually used. Okay, so now what are we at? Was it 30136? Okay, hold on. Now it's way different. Okay, let's go back. So revenue for Feb 13,688. 13,688. Total variable cost 4.5K. 4.5. Contribution margin 9.1. 9.1. Oh, sales tax. Forgot sales tax. And again, if there's no sales tax for whatever reason, there might not be. You can always zero this out. Or maybe some locations might have sales tax, some might not. If your state requires you to collect sales tax on fee revenue, then you put it in here. So, and that's a cost. We'll put that as a separate OPEX. I wouldn't count that as a variable cost, even though it does scale with revenue. It's a tax. It's not like a item. I don't believe that's appropriate to put in the variable costs. Okay. So now we're where are we at for EBITDA for Feb? 28587, and we're at 19. So what do we end up at? 91,821 for sales tax. Well, if we're at 9 to 1, oh shoot. Okay, this is so this is based on that manufacturing model, which was very different than that had a lot of nuance. So here, let's just go revenue minus variable. Actually, we can just start with contribution margin. Contribution margin minus OPEX, and that's all we want. 19,446, and that should be perfect. Okay, now we're lining up. And usually the income statement doesn't take this long, but you know, sometimes to get it right, you have to really check. So I always make sure this balances before I move on. 3 can't read that. 3,386,000. Okay, 363.64. Okay, so that matches now. Thank goodness. So we're good there. Let's update the OPEX here with these. And this should just be, we're going to have to change how this works. The EBITDA calc. Did I drag this over all the way? Yeah, okay. And then merchant fees. Yeah, we doubled that up. Let's clear this. So, and yes, it is. Um, you know, I am spending some time making sure these balance, but trust me, this is a lot quicker and easier than trying to rebuild it from scratch. Okay, so now we got to balance this with the annual income statement, and it looks like we are off here. 127. Let's make sure it's the right. Oh, why do we have an error? Okay, starting with EBITDA, net income, depreciation. 120 is not needed. Okay, that's fine. Well, we got an error here. Let's clear this out and see what's going on. So value error in the initial. Oh, I see. It's the text calc. So why do we have an error here? Well, probably because the income statement annual. Wait, no, this is fine. Okay, C5, C6. It's not. Sum if income statement 125. Yep, that's taxable income. Times tax rate divided by sum if 136. Oh. Oh dear. We don't have this logic in here. All right, let's go back to, I believe it was the manufacturing one, yeah. So when I imported, I missed these two. These are required to do taxes. So B36. Now, if you remember, I was talking yesterday about how before I did the find and replace stuff, I would manually go in and do this. So I'd have to go to the formula, make sure that it could be drug over, and then manually clear out the references to the other workbook. This is not fun. But this, I only have to do it for this one here, so it's not a big deal. So doing it for the whole workbook is definitely a big deal. Okay, so this should help our calculation show value now. Perfect. And this will do trailing 12 for the, yep, for the valuation, trailing, what are we doing? Trailing EBITDA, 12-month sales. I think we'll do a percentage of sales on this one. Yeah, that's good. Yeah, I believe we did pull from this. Okay. Alrighty, so income statement looks good. Zeroed out. That's all correct. Next thing we want to do is go to the cash flow statement and start messing with this. Uh, so we have, let's think about this. So ATM, there's no inventory, although I imagine they have to keep stock of whatever, if it's cash, but I'm assuming they just pay a third party to stock the ATM machines. Let me look at my running costs, variable costs. So that the repair maintenance cost per machine per year, that could potentially include the restocking costs, or you could just put it in here. But there's not really inventory that you're reselling. You're just taking processing fees. So I don't think we need inventory. We have yeah, so we don't need this. We'll hide these extra fixed asset rows on the balance sheet because we don't need that. Now, usually I go from income statement, then we go to cash flow. Payment for materials we don't need. Capex, so this is just the purchase of all of your different ATM machines. So you got 2.7 million there that should match this plus, well, oh, plus this. Let's zero out the building for now. And then remember, even if not used, don't leave a blank date, because that will cause an error to throw in the Capex here, because it just needs to be a date so that this is not an error. But you can zero out the rest of it. Like if you were only doing 3 tranches, then you could just zero out all of this information in any sales tax. But don't zero this out. So, what am I doing? Oh, cash flow. All right, so 1.202 after I remove the building, that should match the total cost here. 1202, it does. Okay, so I know that's linked up. Let's total this actually. Total machines 176. This is just kind of a check calc. We could do a weighted average fee based on, nah, no, that's fine. That's fine. Okay, so we have customer receipts. Yeah, this is gonna be tricky. I already know it. I'm just gonna expect to manually do this part. So if that's 0, otherwise. Okay, so I want other OPEX is going to be income statement, these variable costs, and these. Because remember, this is going to inform the cash flow balance on the balance sheet, and then based on net income and asset purchases and all that, that's going to have to balance. So right now we're just kind of getting a clean monthly periodic cash flow. And to do that, the cash flow statement has 3 main parts, components, everything from that's considered operating activities. And note, there is a lot of confusion between what's considered like operating versus investing versus financing. It can vary. So if you're like looking at a financial statement of a public company or a private company, you would want to look at their notes to see if they had any justifications or reasons for different things to be in a uh, certain section of the cash flow statement. All right, so this is direct method. We're just looking at OPEX or operating activities, then investing. So we have the purchase of the ATM machines in this case, then potentially the sale of the business at the end. Now we want to look at this and make sure it's working right. So terminal value looks like it's doing trailing 12-month sales times whatever percentage multiple, and then there's the valuation. Then we're potentially defining a percentage of that's applied to fixed assets versus going to extraordinary income, which is just a tax thing. If you don't want to show taxes, again, you could always zero these out. No big deal. Um, and then you've got your potential building proceed, which I need to zero this out since we're not going to show a building. So then you've got just your total proceeds here. And this looks fine. Next, borrowing of long-term debt, principal repayments, and then other financing activities would be raising money, so selling company stock, basically. So here we have to do some work. So we have to get the monthly details to show the actual cash flow, and we have to reference the cash flow statement on that. So let's delete some of this, so 113 to 131. And then let's do 117 to 135. Okay. And these are all fine. 132 to 142. Whoop. Why is that throwing an error? That should not throw an error. Break even. We will see that in the chart. We don't need that one either. Okay, so we just got just straight up cash flow. And then we'll have cumulative cash flow here. And then here, let's give ourselves some space. I want to do other cash flow items. And so what we will have is, oh no, don't freeze on me. No, Excel, you're doing so good. Come on. Okay, I don't know what's going on with Excel. Like the last, I'd say, well, if you've been watching the streams, probably month or so, I've been getting these hangups where if I go to reference another workbook, I get this freeze, and then also when I go between tabs, it'll show like a some portion of whatever page I was just on, and I'll have to like go back and forth to make it go away. And I don't know why. I have Office 365, and I do have um whatchamacallit, the thing that allows you to have the most advanced stuff or the latest stuff that's kind of still in testing. So I don't know if something's going on with that. Oh, this is horrible. Come on. We're getting pretty close to be done. What I'm looking to do here is add these other cash flow items that are not on the monthly detail. Oh, there we go. Okay, let's save so we don't lose this. So I want to put these other details from the cash flow state. Oh, what is going on? It's frozen again. So it doesn't want to reference the cash flow statement. I don't know why. I'm trying to pull this row and all of this, and then we could get an actual cash balance, and then we'll see if the balance sheet looks good. Also, let's update these names while we're at it. Okay. And don't forget, guys, check out smarthelping.com for, I've been doing these for all the startup models. I've gotten through maybe 30 or 40. I've got about, I don't know, 10 or 12 more to do, and then I can start doing brand new templates, brand new businesses where you'll get to see me do all of the logic instead of just this three-statement integration stuff. But here, I mean, I've got a problem. I can't reference another tab without it just going backwards. All right, let's try one more time. Nope, it doesn't. It doesn't want to. Okay, so what I'm gonna have to do is manually reference it. So first of all, I can just write these. So this is gonna be taxes, capex, exit proceeds. I believe that's all I need. And then cash flow is going to be EBITDA minus the ATM purchases minus debt service. And then these will be coming through as negative, so I can add that, those three. And then this is how I'll figure out the minimum equity required to get the business to be sustainable and not go below a zero cash balance. And let's widen these out a little bit. All right, well now I just got to get these to come in here. And I don't know. Let's see if I can reference this. Oh, now it wants to work. Okay. Taxes. And I'm not even trying to do the other one. I'm just going to look at what the cell reference is. So I also want 18 and then 19 plus 20. And then this is going to be 19 plus 20. Oh, what do we got? Why is that a reference error? Oh, I just hadn't drug it over. Okay, no, we should be able to drag all these over. Get a number here. I should be able to go to the annual and match this up. Let's just copy and paste this. And these are just going to be sum ifs. Let's do a check. Okay, so that's good. The monthly and annual are matching. All right. Now there's something with the debt I need to make sure that is working right. If for some reason you have debt that's repaid within the before the model end month, which is rare, but it could happen. So let's say the term here is like a 3-year term. I want to make sure okay, so this is a repayment. Okay, that looks like it's working fine. Okay, because I know in sometimes there can be an issue with the debt if it ends before. Yeah, perfect. This is fine. It's going to 0. That's fine. Okay, I'll put this back to say 30-year term. Now, we should have every single item that's going to affect cash flow here. So on our equity position or minimum equity required, including burn and or startup costs, row 131 should give us that number. And then that can flow over to the cap table. That will flow over here to show the minimum needed, and then you can define how that's being raised. The catch-all is in this overflow. If you just want to zero everything out and put it all into here, that's fine. Or if you have multiple investors, you need to figure out how much they contributed in their share. You can do that here. Just updating some of the formatting on this. Now, we should be good here. Let's go to the balance sheet. Oh, there's definitely an issue here. So balance sheet, cash, we have our fixed assets, accumulated depreciation, debt. I'm out by, it looks like, let's see, what's the difference between these? Okay, it's changing. So something's off here between either the income statement, the cash flow statement, and then this is not solving for zero. So we got some issues here we got to figure out. And the balance sheet's literally like your ultimate sanity checker, basically. What's going on, viewers? By the way, don't forget to check out smartly.com for more, and let me know if you have any suggestions on what you're seeing here, or if you just want to say, hey. Um, anyway, let's see. So we've got an issue. 1.202 sounds like it's close to the Capex, but that can't be right actually, because that's 1242. Yeah, that's happening over time. So we got to figure this out. It's quite a big amount too. Cash flow D30. There's a couple things you can use to try and check this number. Before I get into that though, let's see if our OPEX is matched up. Actually, this is what I usually do. Let's go here and measure this against the monthly cash flow. $28,725, 75. So we're definitely out. Let's look at net income. Different numbers here. Okay, so all kinds of issues with this. Let's see. Let's go back here. So customer receipts C10. That's right. And C. This is C and C and C. So OPEX 28, interest. So OPEX should be or cash flow for here should be negative 24,000. 24,504, 505, and then you've got just interest and depreciation is the only other stuff. So no interest is in here. Just we'd have to add back depreciation. So technically, this plus that should equal this. What is this out by? 5,000. Let's just look at the first month. So 836. Taking revenue. Am I including the variable cost in here? Hold on. I did 28,230. Yeah, that is this plus this. Oh wait. Hold on, let's look back at here. So I'm doing income statement C17, 18, and 31. That doesn't seem right. Wait, C17. Where did I get this from? It should be, I don't know where I pulled that number from. It should be 19 and 31. I don't know what I was doing there. Okay, let's try this. Okay, at least now these are matching, so that's good. I mean, that's good. Ah, perfect. So now I'm only out by this one number, 1,202,000. We should be able to find that. So what's this 1,202,000? It looks like our cash is too high. 1,202,000. What in the world could that be? It's this. It's our capex. Also, let's put some stuff in here. Just make sure this is flowing. Um, yeah. So we're out by the capex amount, and I get. Oh, wait a sec. So I've got 2,404 here. Make sure nothing's coming in up below. Oh, here we go. So what is this? 1,202. What is that? Oh, I see. It's the total referencing from that. These all should be zero because we only are allowing for up to this many purchases, up to 27 tranches. So the capex, all these should be zero. This honestly, we could just zero all this out. I'm pretty sure it shouldn't cause an issue. Okay. And there's no useful life because we're saying the useful life is 5 years, and at the end, we're saying that they're fully depreciated by the time the exit happens. And what is this? ATMs? I don't know what the useful life of them they are, that would be. So this would probably just be 100% in this case. All right. Well, that definitely is what was causing our issue. I swear, the balance sheet always finds a way to get you to be off. It doesn't matter what's going on. Something happens, and you find it. You have to figure it out. Luckily, that wasn't too bad, um, and I understand what happened. So now we should be pretty good on this. Let's look at distributions. Distributions is pulling from cash flow 130. Oh wait, We need to make sure actually that we're solving for 0 here. Because that can also be an issue. Yeah, we might not be. So usually the way that I'm structuring the cash flows and equity contributions, we should always be solving for cash 0. So there's just enough cash so that it never goes negative. Now here we have positive values, so that means there's a disconnect between what's going on in the monthly and the annual. And I think, well, for one, startup costs, let's get that in there. Right here. And this should be subtracting that. But also debt proceeds. Where are debt proceeds? I don't see them anywhere. So we want to say if this equals this, pull debt proceeds. Okay. Then we have the repayment on the exit month. And then annual tab needs these. Let's add this in. Alrighty. Balance sheet. We're still out by quite a bit. We're gonna see, so if we go to the monthly, month 1 should be this plus that plus equity. Alright, so we're definitely got an issue there, and then month 2 should just be matched up with this. Oh wait, I need to measure this against cash flow. So we are out, but we're still missing stuff. We're missing Capex still. 15, 25, 70. That's got to be, yeah, this 15, 25, 70. Okay, so it's obviously here. And it should be coming through with this cash flow amount. Which it is. Stock. It's not in the OPEX, 19 to 31. So this does not include any of the purchases. Monthly F107. Oh. Oh, shoot. I don't know, we're counting them here, so minus 115. Yep, that's in here. Let's make sure we're not. Oh, we're double counting. This Capex ATM purchases. Okay, so we can clear this out. Clear this out. Holy moly. Well, this is why you have balance sheets to make sure things are not all screwy. This is now matching. Okay, so that's good. And hey, we are solving for 0. Look at that. We solved for 0 finally. So that means we are now hooked in. All right, thank goodness. Now we should be able to do these sanity checks. Let's check those out. Oh wait, let's make sure this is, yeah, we actually haven't checked this. So 130 is the cash flow. Let's put that here. And based on the year, which is in 2, so there's that. And then this is the same calc, but any negative cash flow periods, excluding year 0. Remaining equity to use is going to be total equity minus startup costs plus any proceeds, and then that's it. Actual equity is that. Okay. Or sorry, negative. Let's give these a percentage, 1 decimal. So clearly we got to issue, so percentage should be, investors is 20, owners is row 25. Whoops. And is that column C, I believe? Yeah. Okay. Investor contributions is just, we go to the cap table, it's just this total. Don't freeze on me. And this is going to be C24. All right. Give these a format. So, project level IRR 33.1%. Let's give these boxes a little formatting. And then IRR of investors versus owners, and total distributions of each. Now, we have, see, look at this. This is cap table data, but that's not actually here. See, if I go click over, now it's gone. So I don't know what's going on with that. Okay, so total ATMs, that's a good stat. Total revenue's fine. These are variable costs, not cost of goods sold. That looks fine. Sales tax. EBITDA 3406. 346, 655. Perfect. So we're good up to here. Average EBITDA, annual EBITDA per ATM machine per year. So this is what you're making per machine after all the expenses. And now we have some Capex stuff. Let's pull this. Debt service looks fine. This is now into Capex, so we don't need that. Startup costs, proceeds from exit is going to be here. Loan proceeds, this. And by the way, this is not, we got to do a sum ifs on this debt one too. And then that can reference this. There's a lot of little things you got to do to make sure this flows when you start changing the assumptions as well. Loan payback we don't need, it's all in the debt service now. And taxes. Okay. Redo this. We got EBITDA. We're going to go plus, minus, minus, plus, plus, plus. Now, this should match our annual cash ending. It does. So we've hit every single item. And we'll check to make sure that all balances with everything else. We're not going to do these. Okay, so these look right. 71 to 25. Are we going all the way out to L? F to O. No, that's got to be C to L. Okay, so these are all off. So let's go total cash returned. Total cash returned investor. Owner. Okay. And the rest of these look right. 33, 71, 25. That's good. This is good. 520, 63. Oh wait, no, this is off. Equity required 583, but then we have 63 and wait, is this matching? Yeah, that matches. 520, 63. Okay. Okay, we're good. So this is good. Our executive summary gives you a nice high level look at every single of one of the different items. You know what, on this I'm going to put these as negative. Any negative is negative, positive is positive, so it's just easier to understand what you're looking at. And now I should just be able to sum this up. There we go. Looking good. Break even. We've got variable costs, fixed costs. This I'm going to keep in here. I like this actually. Running cost Q3. Franchise fee. Well, technically, the variable costs are going to be, let's do it this way. Variable costs I would consider as all of these divided by revenue. Okay, and then fixed costs would be this and this. So now this shows the amount of revenue you need to break even based on those variable costs and fixed. So you can see here if I go, okay, if I make 500,000, my variable costs on that are this 352, and then my fixed costs are this, and you can see I've now broken even. So that if you make this revenue in theory, you should break even each year, and anything above that's profit. Make this a little bit bigger here. That's a good chart. Now for these visuals, let's just make sure they're working still. This looks good. Total ATMs, total transactions per month, average number of transactions per ATM per month, average EBITDA per transaction, average fee, monthly cash flows. So this is the one we want to show break even on. So we'll go cash flow. Is that. And then cumulative. So you can see your break even. Now I can also do, so this, we don't need this. We can just say, if you just want to see just the cumulative, that's there. Format this a little bit. I don't know why I lost the dates, but okay. So you can see when you break even, about right there. Kind of don't like this chart design actually. That's crazy. This would be cool, but it's kind of, why are, let's delete, there we go, nice. Just trying to show data points. So this is really cool to see break even. However, where is the axis? Where's the axis at? Oh, there we go. There we go. Okay, that looks cool. I want to do that with this one. Oh, we can't. This one kind of works though. You see the break-even point. There's a monthly cash flow. It's hard to see the monthly against the cumulative. Let's just let's do this. There we go. So now you can kind of see a bit better per month what's going on. Now if we removed the exit, or let's lower this a bit. Let's make it 60%. Alright, still high. Well, this is what, 30,000. This is selling for 900. Let's not include terminal value. There, you can really see it now. So in this case, based on the assumptions I put in, they are losing money after over time for some reason. Let's see why. These all need to be minus 30. Okay. Here's gross profit per year. This is actually, yeah, that's fine. Okay. Why are we losing money? Well, probably I've got these costs going up. Yeah. Let's have these stop going up after year 2. Yeah, I put in some arbitrary numbers here. And so I had the fixed cost going up more than the revenues. So that's why. Now it's kind of steady. Yeah, now it's at least going up a little bit. Again, my numbers are arbitrary. It literally does not matter. All that matters is you're going to look at this for your situation and see what makes sense for your assumptions. All right, so that's all good. Let's get these sanity checks going. Oh, we gotta format this. So now I can change these positions now that we've got the model done. So let's put these over here. These are just high level. Oh, whoops. We need more space. So this I'm gonna call fee assumptions, fee day. Give it a thick bottom, bold it up. Okay, so sanity checks. This is to make sure all the things we just did all match, which they all have to no matter what. So let's check this. So income statement annual 127, that's good. Balance sheet, so let me make sure it's the right row. 122 looks good. Annual detail against monthly. I know we have to update that one, so it's going to equal this. Annual detail here. Yep, got to update that against that ending value, and then we're also going to subtract the equity. Executive summary, distributions. Wait, what is this? Oh, to annual ending net cash. Okay, we definitely got an error there. Probably because this needs to go C10 to L10. Or actually, it needs to include this. 3470, yeah. So B10 to L10. Okay, and just, oh, $42. What could that be? N57, R59. Yeah, what in the world's going on here? Oh, so so C9 needs to be C10, I believe. And then 10. Okay, and then the sanity check goes against 10, and then this goes against 25 and 17. Make sure these match up. 32.7, 82. Perfect. Okay. All right. Now this is the moment of truth. Let's start changing these. Usually the date is the biggest thing, so let's change that. Make sure we see zeros. It looks good. Let's go to December. Looks good. Mid-year looks good. Now let's say if we have include terminal value. Looks good. End year, good. Mid and end. All right, now let's see if we apply, let's say 60% of that. Let's see what happens here if they're all zeros. So that works. But logically you wouldn't model if you've got the Capex fixed assets running out of fully depreciated, really you'd only have this. Let's say there's a building cost here. Oops. So that just goes, okay, these are still zero. I just want to see, make sure this is flowing right. Okay, so 579. Perfect. So it's taking this number no matter what, which is the right number. Oh, wait, 966. No, so this needs to be 100% if you have no items to depreciate at the end of the forecast. Otherwise, so see sale biz 966, and this will change materially the cash flow sheet. So see we have here 4607, 777. And if we change this to say 60%, it's now 4,306 versus 4607. So it doesn't cause an error. It's basically just saying that that amount that's being applied to CapEx is just not getting counted anywhere. And the reason why is because this is splitting that amount evenly over the based on the relative cost of each of these items. So if it's saying it's all zero, then just nothing's going into it. So just put 100% here if that is the case. Now you can see if we were to put useful lives of, let's say, where did I define this at? let's say I put it at 11. Now you can see there's book value left here. And now I want to apply some of that to it. Now you can see there. And now we have the total. The total exit proceeds of 966 is coming in between these two, 966. So that's good. So that's how that works. Now likely the useful life is going to be a lot less than that, so we're just going to put these back to 5. And then for this, we'll just assume 100% is going to extraordinary income. And again, this only a tax thing for this. Just always put 100% here if you're not worried about the taxes, and zero out the tax rates, which that will not cause any errors either if you zero those out. All right. Well, a lot of updates here, a lot of checks, a lot of things we had to do to make sure the model worked right, but we finished it. It's 11:22. It's an hour and 22-minute stream, pretty long for me. I'll do the general overview video of this tomorrow, like a quick, I try to keep it under 10 minutes that goes through the whole thing. And just making sure these are all up to the left. Okay, looks good. And then I'll update the index tab with these new tabs tomorrow. Then we'll get it updated. So yeah, if you want to purchase, it's only 45 bucks. Link will be in the description box below. Also, don't forget to check out more models at smarthelping.com. Again, this is part of the industry specific category that I'm updating, the ATM model right here. And you can also check out more templates, $999 to buy everything on the site, or you can buy by categories. I've got all kinds of categories here, even accounting tools, real estate, HR, personal finance, just general Google Sheets with some cool architecture for tracking a bunch of different stuff, CRMs, to-do list trackers, just a whole bunch of stuff here. This one is actually, the database report on multiple criteria is actually really, really, really interesting if you're tracking any kind of data for your business. This is a good one to look at. Sales pipeline, general valuation. All right, that's all I got for you today. We'll see what I do the end of the rest of this week. It'll depend on how I'm feeling, and like I said, I might do a seller finance